Hi everyone, thanks for checking in. It's Adam Coburn here at Low & Co, and we're looking at the Wellington market data for the month of May 2026, comparing it to the last couple of years and trying to observe the trends, see what's going on according to the actual facts. So folks, Wellington market does remain pretty weak. Values in May reached a new low point since the peak of October 2021. We sort of dipped out in, I think it was May 2022. May 2023 was the previous low point. Then we recovered into the election late in 2023. Then values since the election have, broadly speaking, been eroding ever so slowly. I mean, the big picture is values have been going sideways for kind of over 3 years now, but since the election it's been a very, very gradual erosion of value. So we're down to a new low point since the peak in October 2021, I'm afraid to say. Message for sellers is that as well as values being low, sales volumes in May really did drop quite a bit. I wonder if this is related to Iran concerns and confidence being eroded, with high fuel prices and people being worried about it. What's that going to do to inflation, and will interest rates have to be driven up for these reasons? But yeah, sales volumes quite weak in May, so let's see if they rebound in the coming months. For buyers, look, as is typical for this time of the year, we're seeing fewer listings coming to market. That is just a seasonal thing. We're sort of in the early stages of winter now, and that's what we tend to see. So whilst it might seem like, whilst there is less new stock coming to market, there is still a huge amount that's already on the market out there. In fact, we've got more choice, more on the market today than we have for this time of the year for 11 years. So there's an abundance of choice out there if you're a buyer, which is obviously great news for you. So let's look at the detail. Median sale price $770 in May versus $792 a year ago, so down 2.8%. The median sale price is not my favourite indicator of value because it does depend on the mix of properties that are sold during the month, but the overall trend is still instructive, I think. We saw the huge drop there. If you look at the red line, that's the 6-month average, obviously there's a bit of a delay there because it's over 6 months, but for the last over 3 years, that red line has been going very broadly sideways. But you can see, if you get your magnifying glass out, you can see a little bit of an increase going into the election last time, and then since then, roughly speaking, it's been eroding very, very gradually. But the big drops are way behind us. My preferred indicator of underlying value, which of course is what property owners are really interested in, is underlying value, is the Real Estate Institute House Price Index. Let's start with the league tables. This is looking at changes over the last 1 month, 3 months, 1 year, 5 year, and the movement from the peak late in 2021. So as has basically been the case since then, over the last 4.5 years, Wellington has fallen further than any other region of the country. And as I indicated at the top, we are at a new low point in May at 27.7% down from the peak. Auckland, not all that far behind us at 23.4%, but everywhere else doing materially better, or at least less worse. Over the last year, Wellington has also suffered a bigger drop than all other regions of the country. Obviously much smaller numbers, 3.3% down over the last 12 months versus 2% in Auckland, 0.6% down over the whole country. And specifically over the last 3 months, there has been significant weakness there too. So Gisborne, Hawke's Bay also suffered the same kind of level of drop. But focusing on Wellington here, we have had quite a bit of weakness in values over the last 3 months. So 3.4% down over the most recent 3 months. So if we look here at the graph, you can see here the blue line shows the movements in the house price index for the month, and the orange line shows the cumulative movement over 3 months. So you can see there, look at the last 3 months there, or very recently, the orange line shows a very clear and distinct sharp drop off. We were in reasonably positive territory there at a few percent going back a couple of months for the previous 3 months, but over the last 2 months we have seen a very, very distinct drop off there. Now, is that a coincidence that it coincides with the conflict in Iran, in the Middle East, and all the resulting fuel price increases and the narrative around what's that going to do to food prices, what's it going to do to general inflation and energy, and does that mean the Reserve Bank is going to need to increase interest rates even more? And indeed we have seen interest rates and mortgage rates increase reasonably significantly in the last few months. So I suspect that's not a coincidence, and so you can see there, yeah, we have had quite a drop off there in values, and in fact at negative 3.4%, it's the biggest 3-month drop we've seen in Wellington since July 2024. So almost 2 years has gone by before we've seen a drop of this magnitude, and you can see there that at 3.4% down, it is quite an outlier compared to typical results over the last couple of years. So yep, not wonderful news for homeowners. But great news, of course, for buyers. In Wellington City, broadly the same theme. It's a bit more erratic. It's the peaks seem to be a bit higher and the lows are a bit lower, but the trend is still the same. Over the last few months, we've seen a significant drop-off in values in Wellington City also. What about supply coming to the market? So there's new listings, 633 in May versus 632 a year ago. So let's call that exactly the same. Oddly, it was 931 2 years ago in May. So new listings coming to the market massively down by 32% compared to 2 years ago. When I saw that took me by surprise, and I went back and looked at the actual data. I thought maybe I'd made a mistake in it. I traced it right back to the source data. No, it's correct, unless the source data, of course, had an error in it. But all I can say is that month of May was not typical. It bounced up in that month and then back down again the next month. So I wouldn't draw too many conclusions. Now, obviously, as a seller or someone who's thinking of selling, what you want is fewer new listings coming to market, fewer new listings to compete with when you're trying to get the attention of the buyers. What can we draw from this? Again, you look at the red line there, you can see that over the last 2 or 3 years, we have been operating within what would be considered a normal range of new listings coming to market. So not high, not low, typical seasonal variability there, but we're operating between 600 and 800 new listings coming to market a month. Nothing strange there. So it's not kind of good and it's not terribly bad for sellers. The month of May at 633, ever so slightly less than what we typically see in May, the average being 659, so let's call it roughly average. So yeah, pretty normal in terms of the flow of new listings coming to market. So this weakness we're seeing is not because the amount of property coming to market is higher than normal. And comparing it to 12 months ago, you can see there that the last 6 months or so have been really very similar to what we've seen a year ago. So no great news story there, not good, not bad. On the other side of things, how many sales are we seeing taking place? So obviously new listings brings property to the market, number of sales takes properties off the market, and if there's an enormous imbalance there, you get overall supply either swelling or contracting. So, and this is where we see clear weakness really in the market. 604 sales in May versus 705 a year ago and 678 2 years ago. So 14% down on a year ago, 11% down on 2 years ago. Again, look at that red line. You can see there that typically, again, we operate between 600 and 800 sales in a month. We saw big drop-offs as we came into 2022. Buyers stepped right back, didn't want to catch a falling knife. As we headed into the election, things started to recover, and they were consistently recovering, and then they plateaued right at the bottom of what would be considered the normal sale volumes, around the 600, very early 600s per month, and we've been tracking at around those levels for the last couple of years. The last 6 or 8 months, though, if you look closely, a very gradual erosion, so number of sales dropping away slightly, and in May in particular, as is indicated by those numbers, 14% down on a year ago, so quite a big drop off in May. Again, is that specifically related to this particular timing in the market being around the conflict in the Middle East, the resulting concerns over inflation, fuel prices squeezing people's wallets, concerns over interest rate rises, and so on. So now that we hopefully are progressing towards resolution in the Middle East, hopefully some confidence might return, but time will tell. Compared to what's normal in May, 707, so basically last May at 705 was bang on typical for the month of May in terms of number of sales. So again, we're down significantly against what's normal for the month at 604. So this is really where we're seeing weakness in the market at present. The number of sales taking place has just dropped off in the last month or so. How long is it taking to sell? Well, this has been a reasonably consistent theme also, obviously with variability month to month, but again, if you look at the 6-month moving average, we've seen the days to sell just gradually increasing. So we're still at quite a long time to sell, on average 53 days versus 50 a year ago, 39 2 years ago, and versus the average for May at 41. So 53 versus 41, still quite a long time. Again, look at that red line. You can see it's a bit bumpy. It goes up, it goes down, but the trend over the last 3 years since the election basically has been the duration to sell has been increasing. It's still taking quite a long time to sell in Wellington. On the inventory side of things, a similar theme you can see there. Big increases in inventory after the election, then it plateaued a bit, and the last 6 or 8 months gradually increasing. So 16.8 weeks versus 14.7 a year ago and 14 2 years ago. So yep, it is actually not that much longer than the long-term average, which is 15 weeks, but over the last 11 years, the average has been just under 11. So compared to 11, what we've typically seen in the last 10 or 11 years, almost 17 weeks feels like a lot of inventory. Number of listings on Trade Me, 3,227 as of a couple of days ago when we were recording this, versus a year ago 3,074, so 5% more than a year ago, 13% more than 2 years ago. Again, look at that red line, that shows us the trend. We have been sort of increasing slowly in the last couple of years with your seasonal variability. Look at the blue line, you can see the blue chart, you can see over the last couple of months, as we would expect as we enter winter, the amount of supply reduces as the flow of new listings slows right down. That's just typical for seasonality. But again, if you look at the trend, we are at, that red line is higher than it's been since 11 years ago. And if we look at the June numbers on the market, similarly in June 2026 right now, we have more on the market than we've seen for any June since 2015. So that's great news for buyers. You have more choice out there than you've seen for 11 years. And again, if you compare it to 12 months ago, we are way more stable now. Our overall gross levels of supply are way more stable over the last year probably than we have seen previously. We saw these massive increases, then we saw these decreases versus 12 months prior as we headed into the election, then after the election big increases again, and then much more stable in sort of recent times. I do want to have a quick look at this interesting bit of data regarding selling before the election. So I just want to mention this because it's a very common belief that selling in winter is a bad idea and selling before the election is a bad idea. But ironically, because everybody thinks that way, the amount of supply coming to the market in winter, and especially in an election year, tends to contract a lot, and that actually makes it a whole lot easier to compete for the attention of the buyers. So you've got a couple of charts there showing what happened in the market before the last election, and we saw open home traffic, enormous spike in open home traffic to 8.7 or thereabouts. In the months prior to that, we were seeing 2.5, 3 on average to each open home. So that's an enormous spike in activity per listing, per open home. In terms of actual values, the Real Estate Institute House Price Index, as you can see from the absolute bottom, kind of 6 months before the election to just right on the election, values actually increased by 10%. And then as soon as the election was over, when all the sellers thought, good, the election's now out of the way, I'll get my property on the market, values just fell away straight away again. Same with the open home traffic, fell away straight away. So the message there is, if you are thinking of selling this year, in the next 6 months or so, for goodness sakes, do not exclude selling during winter, selling before the election. The data actually shows that it's quite a good time to sell. So in summary, folks, values have been flat to very gradually declining in the last sort of couple of years, or 2.5 years since the election, and we did see some softness in May in particular in the last couple of months also. New listings are stable, broadly stable, slightly below May norms. Sales volumes down in May specifically, and that's really the major point of weakness in the market during the month. And I do wonder, is that related to the Iran impact and the impact on confidence? Duration to sell is long, and it has been gradually increasing on average. Inventory is above long-term levels. Trade listings are slightly up on a year ago, but not by very much. Over the last 12 months, when you adjust it for seasonality, it's been relatively stable, very small increases only. But more stock for this at this time of year than we've seen for 11 years. So still an abundance of choice. So the message for sellers is that values and sale volumes have been weak recently. Doesn't mean you can't sell, of course, but it just means you need to be realistic on your price, and typically you need to present your property well. These have always been the case, but in a tough market like this, they are even more so. Message for buyers: there's still a ton of choice out there, although the flow of new listings, as is typical in winter, has slowed right down. So I do encourage you to get amongst it. Big thanks as always to Real Estate Institute and to realestate.co.nz for my source data. Thanks to you for checking in. Obviously, if you want individualised advice, I'm happy to help. Please reach out. It's Adam here at Low & Co. Otherwise, have a great month and see you next time. Cheers.